Opendoor Technologies is navigating a challenging period in the real estate market, but there's potential for growth and improvement on the horizon. The company recently announced plans to seek shareholder approval for a reverse stock split, which is designed to maintain listing compliance and support long-term shareholder value. The reverse split is a practical move, given Opendoor's current share price is well below $1, and the company risks being delisted if it remains below this threshold for an extended period. While a reverse split typically doesn't change the fundamental value of the company, it can help to maintain investor confidence and ensure continued listing on the Nasdaq. Opendoor's business has faced significant challenges in recent years, including a slowdown in the real estate market and rising interest rates. Despite these challenges, the company has shown resilience and adaptability. In the first quarter, Opendoor bought over 3,600 homes and sold 2,946 homes for a total of $1.2 billion, exceeding its own guidance range. The company's latest results are a mixed bag, with revenue growth offset by declining gross profit due to the slow real estate market and high interest rates. Looking ahead, Opendoor's guidance for the second quarter calls for a significant jump in revenue. While it's uncertain whether the company can sustain this momentum, the potential for growth and improvement is evident. The reverse split news doesn't necessarily imply a negative outcome for Opendoor, and the company still has opportunities to turn things around and show a sustainable path to profitability. However, investors should be aware that the outcome is likely to be binary, and the stock could potentially go to zero if the real estate environment continues to be slow. Despite these challenges, Opendoor's business model has potential, and the company has a strong track record of innovation and adaptability. With a market cap of around $413 million and revenue of over $5 billion in the past year, Opendoor is a company worth watching. Whether or not now is a smart time to invest depends on individual investment goals and risk tolerance, but it's clear that Opendoor is a company with potential for high risk and high reward, as well as growth and improvement. For more on stocks and crypto, follow Ascencore. Thanks for watching and have a nice day.